It's time now for our business update, and we're joined from Dubai by Jameel Ahmad, Chief Analyst at GTC Group. Good morning, Jameel. What are the main trends we're seeing on the markets this morning?
Good morning, and thank you for having GTC Group as always. This morning, we're actually seeing a little bit of a quiet market because there's a few different public holidays taking place in the Asia region, mainly in China, Hong Kong, Taiwan, but also some financial markets are closed in Australia. But if we look at the end of last week, we had a lot of excitement, a lot of volatility. All of the US major averages and main indexes like the S&P 500, the NASDAQ, the Dow Jones, they all ended another week positively. However, we do wonder if there's a spanner now thrown into the works because the US economy had another blockbuster monthly employment report, added more than 270,000 jobs to its economy, which is nearly 100,000 above what was optimistic expectations. And we also have this news from France as well about the election. So we do wonder whether now we have a combination of returning political risk, potentially in Europe, as well as really we've pushed back interest rate cut expectations in the US to the point now where the door is closing rather than being left ajar. And I do wonder whether we might now have just hit the highest peak we can of the summit for global financial markets, and whether from here onwards we might have more of a profit-taking season about to commence.
And we've also seen the price of gold dipping today. What can we read from that?
It wasn't just a dip, it was the sharpest drop in 3 years on Friday, Oliver. We saw $100 wiped off the value of gold. And this all, again, feeds back into US interest rate cut expectations, in my view. You had the US economy adding close to 100,000 more jobs over the month of May than what was expectations. We've also seen the US interest rate cut probabilities being completely smashed. Just on Friday afternoon, we saw now the expectations for a US interest rate cut in September is now about 50-50, when it was close to 80% before that US economic data. And now we also see that most expectations is that if we get an interest rate cut in the US, and this is a big if, it will only be one this year. And again, I point back to our previous conversations we've had over recent months. As we headed into 2024, there was a lot of hype priced into the market that the US central bank would cut interest rates maybe 2, 3, even some for 4 occasions. As we sit here in June, we're going to be lucky if we get one US interest rate cut. And I'm actually a little bit pessimistic as to whether that could be the case. But the Fed are always known to rally and rescue to the beat and the tune of financial markets. Financial markets have priced in a US interest rate cut. And I do think the Fed will try to appease those investors. However, we need to see some slight weakness in US economic data, and specifically progress when it comes to this ongoing battle against inflation, in order for financial markets to get what they priced in.
And looking forward to this week, we're expecting some key economic data. What will be in that?
It's going to be another busy week. We've got the Apple conference taking place later today, which is going to be very important for those shareholders for Apple. We also have the US Federal Reserve, so we're going to hear from the central bank. We're going to have the latest US inflation numbers, where we expect 3.4% to be expected. That is still significantly above the 2% target, and is hardly going to create excitement that, yes, the Fed are going to cut interest rates no matter what, because actually the devil's in the detail, and the data proves otherwise, that actually the US economy is doing fantastically well. It might be dipping from last year, but it's still doing so well that there's not really a clear argument for the US central bank to cut interest rates. Completely different to the European Central Bank and what the ECB are doing right now. And we also have some key economic data from Japan later in the week. So I do expect there to be a lot of different dominoes fall into place for investors. And I do think that activity is picking up when it comes to volatility.
So a busy week ahead. Thank you very much for that, Jameel Ahmad, Chief Analyst at GTC Group.